Today we are going to be talking about how to make $100 per day by trading stock options. And this is going to be a list of concrete and, most importantly, actionable steps that you could take immediately after watching this video. But I'm not trying to kid you, the methods on this list only work if you do. You're going to need to put a substantial amount of effort into practicing and finding opportunities where you can apply these steps. And while there are many different ways to make $100 per day by trading options, the methods that I'm going to be presenting on this list are going to be some of the most straightforward. This is a no-frills guide to trading options. And perhaps most beautifully, you don't need to know anything about options going into this video. You won't be lost. I'm going to explain everything along the way. But most of you do already know that there are some major benefits to trading options. For example, you can substantially increase the proportion of your gains. They give you the leveraging power to multiply your gains while also using less capital. And when done correctly, options can be a beautiful tool to help you earn more consistent profits. So let's go ahead and do a quick preview of what's going to happen in this video. So in the first part, we are going to be going through what options are and why they can be an excellent tool for growing your account. If you are already familiar with options, I'll put a timestamp so that you could skip to the next section. In the second section, or the second part, we are going to introduce and demonstrate options trading through simulated examples. I'm actually going to take you through an options trade. And then in the third part, we're going to be talking about the different patterns to look for and how to scan for opportunities, or how to find opportunities, and then I'll introduce some other ways to make money trading options. This is a very foundational course on how to make $100 a day trading options. There's many different things that you should know about trading options, but I tried to formulate this on sort of a need-to-know basis so that if you know nothing, you could still implement the steps in this video based on the information that's solely in this video. So in return for all this beautiful value, the only thing I ask of you is that you hit that ravishing like button. And boy, is that ravishing. And also subscribe for more short, sweet, and simplified videos on how to trade the stock market. Okay, so to start, if you know absolutely nothing about options, this is the time where I'm going to take you through some of the most important terminology. If you are already an options addict, then feel free to skip to this timestamp. So options, put quite simply, are a ravishing tool that we use as traders to profit off the fluctuations of the market. It allows us to amplify it in quite a beautiful way. These are extremely useful for traders who want to focus on larger cap stocks that have small intraday movements. The benefit of options, much like I just said, is that they efficiently leverage the power of each dollar that you bring to the market. Put simply, your account may not be able to buy 100 shares of Facebook at a total of around $20,000, but trading options allows you to control the same 100 shares of Facebook, spitball it, and say a $3,000 investment. And this is valuable because in a stock like Facebook, the share prices don't move that much. So we will need to have a lot of shares in order to actually see a decent dollar gain when we're looking at our P&L. So this is where options come in. And there are just two types of options and two different actions that you can take on them. One is the call option and one is the put option. And with each of these, you have the ability to either buy or sell. When you are buying an option, you pay a specified price or premium just to own it. When you sell an option, you immediately receive a credit as you are the one that has paid the premium. Now, of course, since this video is focused on trading options, you don't really have to worry about paying or receiving premium because that's a whole nother subject. Now, if you are bullish on a stock, aka you think the stock is going to increase, you can elect to buy a call option or sell a put option. If you are bearish on a stock, you think a stock is going to decrease, you can elect to sell a call option or buy a put option. And that's pretty much the foundation of it. And these options are basically electronic contracts that have both a specified value, called the strike price, as well as a specified expiration date. And with that in mind, the price of options varies based on movements in the share price as well as time decay since there is an expiration date. But since this tutorial is going to be based on short-term trading of options, we are going to be trading stocks that have an expiration date of around 50 to 60 days in the future, and thus we don't have to worry about decay that much because we aren't holding them long enough for that to be relevant. And that's basically Options 101 and everything you really need to know at this point. So let's go into Options 102. So going further, here's our options pricing table. We have all of the different expiration dates, the Greeks, the buy and ask prices for both our call and put options, and we have our beautiful strike price. We are focusing on short-term positions, so we want a date that's far enough in the future that we don't have to deal with the expiration date time decay. that I mentioned earlier. Again, because options contracts lose value as they get closer to their expiration date. But we also don't want the date to be too far, because then we'd have to worry about interest rates being factored in. And the perfect space for that is about 50 to 60 days out. There's also a liquidity reason for doing this, which we'll talk about later. But you can see the dates on the options pricing table along with how many days away you are. Now, one options contract accounts for 100 shares. So if you buy one option, you now have the option for 100 shares. This is also called a lot. The buy and asking prices per lot are displayed here. Now the highlighted contracts, you'll notice there's a highlighted area and a non-highlighted area. Now the highlighted contracts are called in the money contracts, and the non-highlighted ones are called out of the money contracts. That's just a fancy way of saying that if you were to execute on the contract now, that you would make money. You would be in the money. Your strike price is at a favorable distance based on where the current trading prices. Since call options are positive in value when the current market value is above the strike price, that means that anything below the current trading price is going to be considered in the money. Likewise, since put options are the opposite and are valuable when the strike price is above the current market value of the underlying stock, that means that anything above the current price is going to be considered in the money, and anything below is going to be considered out of the money. Now there's also our Greek letters. Since we are trading short term and not holding, let's go ahead and focus on the delta. Delta is how much money we make per dollar of increase in the actual share price. If we have a delta of 85 cents, for example, that means that for every $1 increase, we just made $85. If we were just buying the underlying asset, Facebook, every $1 increase would only account for $1. So you can already see the difference in power. Likewise, with put options, the delta does the same thing but is negative. Since put options are a bearish position, you are expecting the price to go down. So every increase is bad, and thus deltas are negative. If the stock price that you have a put option on goes up by $1, you lose money, and that is why the deltas are negative. But if the stock price goes down by $1, this works in your favor. If you have a delta of, say, negative 84 cents, that means that if Facebook goes down by just $1, you now just made $84. And the gamma Greek letter, that's the incremental change or the acceleration that's going to happen after that first dollar. How much does it change in terms of each additional dollar that you win or lose? But I don't want to go into that too much. We'll just leave it at this because it is a step-by-step tutorial. But anyways, the point is that in general, we do want to have a delta that is high so that we can make more dollars per dollar of increase. Okay, great. So now, as the Russians say, it's finally time to drink some vodka. We are now ready to pair our new option skills with the movements of actual stocks. So we're looking at Facebook. We see that, hey, look, it's oversold on the RSI. That means it's a good deal. Anything below fair value is a good deal, but anything below oversold is a very good deal. So we're going to go ahead and look in here, and we're testing a confirmation. We're still underneath the SMA line, but if we cross over it, that'll mean that we're in confirmation territory. We would have just had a confirmation. Now, it's not exactly crossing over. What we need is the first candlestick to hold above the SMA line. And if we have that, that means that we'll be looking for price strength, much like over here we had price strength. See, if you bought in a confirmation here, you could ride the price strength, and then you know when it starts to decrease. But over here, we're testing the same thing. So if we see confirmation, then we can take a position, and we can amplify our gains using the contract option setup. And we have upward potential all the way to today's highs at 194-ish. So beautiful, beautiful upward potential. It wouldn't be great upward potential if you were taking an actual position, because that's only a couple dollars. We'd have to buy a lot. But with a contract, that's not really the case. So while we're waiting for confirmation, let's go ahead and get our contract set up so that when we do see a confirmation, if we see a confirmation, we can then execute on it. So let's go over here to trade. Now, this wouldn't have been open. I had it opened earlier, but you're going to see this when you go over to trade, and you could pick what date. We're going to want something 50 to 60 days away. And we have all of these different options. It's really quite beautiful. We have, this is the most important part, is our volume and our open interest. Now, we need a good combination of delta, volume, and just overall contract price. If we are stuck in a contract that doesn't have any liquidity, then we're not going to be able to get out. So it doesn't matter how great the delta is if we can't get out or get in, really, for that point. So let's go ahead and execute on this one where we have this all set up. So if we do see a confirmation, then we can take advantage of that. See if we have a confirmation. Look, we actually have a confirmation. Okay, let's go ahead and execute on it. Send. Okay. Did it fill? Yep, it filled. We're down $5. Beautiful. Okay. So now we have a confirmation. Let's see how we do with this confirmation. Price strength, price strength. Ooh, Okay, let's go ahead and fast forward it, say to 15. How are we doing? Okay, so we had a little bit of price strength over after this confirmation. We had some price strength. We had a red candle, but we still hold because we're still over the SMA line, which shows that we still do have some price strength. Unless you're very conservative and you're using validation points for this. But if you're not using validation points, you're going to just be judging this based on the price strength. It's based on, kind of like your experience level and where you are in the market and what type of stock you're trading. But for a mainstream stock, it doesn't really pay to be too conservative and use validation points. Instead, I'd recommend measuring the price strength over the SMA line. Then we continued seeing some run-ups. And then we continued seeing some running up, boom, 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 and then some weakening of price strength. Again, the price strength is the real estate between the SMA line and the price action. And then we saw some struggling back and forth. Now, this is the first candlestick holding below the SMA line. I'm going to go ahead and say that we're going to take our profits here. It looks like it's going down. So let's go ahead and take our profits. We have a P&L of $370. Let's go ahead and take our profits. Sell. We're selling the contract that we had already filled earlier. And boom. And now we have P&L of $370 on this beautiful simulated trade that I cherry picked to show you guys how this would work. But in any case, this is an options trade. This is how you'd execute on it. If you'd like to practice, you can use this beautiful on-demand feature to practice on actual price action. And the key with this, though, is that you just because, in this case it went up, right? But it didn't have to go up. So it's very important to make sure that you're cutting losses quickly. If you're not cutting losses quickly, you're going to expose yourself up to a lot more risk. And while the profits are multiplied in our favor, in this case, if the stock price had gone down, or if something didn't go according to plan, our losses would have been multiplied as well. And that's the reason why there's so many different ways to manage your risk, and I present a ton of them on this channel. I have a whole trading tutorials playlist with just a ton of material that you could use to manage your risk when trading within the stock market. Okay, but what if you're trying to benefit off a overbought play or an overreaction play? So we see AMD on this particular day gapped up massively. It looks like in the pre-market probably, or after hours, and it gapped up massively, right? It opened up much higher than it was. It closed at 27.59 and then it opened up at 29.15. And now it's breaking down. So let's play this like an overreaction. We have a green candlestick and two red candlesticks, and it does look like it's going up. Okay, so we do have a green candlestick, but let's just go ahead and get our order ready just so we have this ready. We're looking for something over 50 days. Here's 51 days, and I already have this highlighted, but this was the put option. Since we're going short, we think the stock is going to go down. Looks like it has another red candlestick, so we better hurry. But it looks like it's going to go down, so what we're going to take is we're going to go ahead and buy a put option. Now, this time I'm only going to do one because I think that's a little bit more realistic. The last time I did 10 when we were doing Facebook, but this time I'm only going to do one just because I think most people are going to start off with at least one contract. So confirm and send. Okay, still red. Now, not to mislead you though, this isn't, you don't take a position just because there's two red candlesticks and it looks or feels like it's going to go down. This is an overbought play that gapped up massively after hours and in the pre-market, and then it opened higher, but then all of a sudden started breaking down and it's closing the gap between the real estate and the price action. Now, the question here is, will it continue? Well, we don't know that at this point. Obviously, this is a simulated play, so I already know what's going to happen, but if we were looking at this in the market, we're not going to know. We just see the green candlestick. This could be the sign of a reversal or increased price strength over the SMA line. We don't know. We don't know yet. So let's go ahead and fast forward this a little bit just to get a better idea of how this trades. Okay, so we continue to see the price action going down, and we have three red candlesticks now. So let's go ahead and go back over to our options tab and see how we're doing on P&L. So P&L, we've made $12 in 10 minutes. Okay. Let's go ahead to, let's make it 7:10. Obviously, if you're trading intraday, you'd have a bunch of alerts that would alert you to what's happening so that you could look at other positions as well. But in any case, we are back to the SMA line. The price action is completely closed, and now we're struggling back and forth over it. And looks like it's trying to attempt to stay above it, but it's not doing such a good job. In any case, quite a decent amount down. Let's see how we're doing on P&L. $1. Not so good. Okay. But in any case, we're still in the game. No reason to close our position because we still have... Okay, so what ended up happening... Whoops. What ended up happening is it went from overbought and we shorted it up here, took a put option. We didn't short it, we took a put option, and all of a sudden it couldn't keep above, it couldn't hold its price strength over the SMA line, so it rapidly broke down, and now we're almost at the reversal line, our long-term SMA line. In any case, there's no signs of it going back up. It's a pretty strong downtrend, but we're going to go ahead and check our P&L and see how we're doing. Now we're at $408. Now this was just one contract. This example is actually what I would say is a little bit better of an example than the last one I gave, because most people are going to be buying 10 contracts of Facebook when you just started. But anyways, if it does hold on our long-term SMA line, I might consider just exiting the position and taking my profits. If it doesn't hold, then we might continue just holding it so that we can profit off a more sustained downtrend. Usually when it breaks down below the lower SMA line or the long-term SMA line, what happens is that's a sign of a reversal of direction, and if it's a downward direction, it's more likely to continue going downward. And as we know, previous support becomes new resistance, previous support becomes new resistance, and vice versa, so it could change the direction of the stock, and we do have a strong downtrend on this. But in any case, just because this is an example, we're not going to be too greedy, especially because this is a simulated trade. So we're just going to go ahead and resell our option. Gotta be very careful of this. And we have a P&L for 376. But one of the things that I'm going to give you is that, number one, you're going to want to cut losses quickly when you're trading options. Unlike with regular stocks, you're going to lose a lot more when you're trading options because of the fact that it's multiplied. And having a set criteria to cut losses is all part of having a plan. You create a plan for both your entry and your exit point. Specific point in time, be that confirmation, whatever, specific point in time where you're getting into a position, and then a specific point in time where you get out of a position. When I say specific point, I don't mean like a specific actual time, but I mean a specific point in time where you have a certain criteria that has just been met. So when exiting positions, this could be price weakness. It doesn't matter if you have a profit or a loss. If you're seeing a certain criteria of price weakness, be that a validation point or be that just rapid price weakness over the SMA line, then you may consider exiting out of a position. Those are just some examples. I have a ton of videos, links below if you need more help with that. Okay, so what patterns, types of stocks, or opportunities do we need to be looking for when trading options in order to make $100 per day? Well, I usually like to focus on low cap, high volatility stocks for my regular positions because of the simple fact that they have high volatility. But since options allow us to multiply the movements of volatility, that means that we can focus on higher cap stocks that have less volatility, but are perhaps more consistent and a little bit more predictable for us. And the key with this is consistent. Consistency is key. If we can find higher cap stocks that have consistent movement intraday but longer term stability, we can lower our risk of losses but also have lucrative opportunities. For example, let's say we are looking at AMD and acknowledge a pattern of breaking above the long-term SMA line and holding price strength above our blue short-term SMA line. We can then take advantage of these positions next time we see a confirmation above our long-term SMA line and our short-term SMA line, and instead of buying shares, we could buy a lot or one contract and multiply our benefit from the little over a $1 of price action run-up. Likewise, we can use a put option to multiply the same stock's pattern of breaking down over $1 after the run-up. And using a put option exposes us to less risk than shorting because of the fact that you can't lose more than the cost of the contract. Versus with shorting, you're hypothetically, or theoretically, I should say, you're theoretically open to unlimited losses. The stock price can just go up exponentially. But of course, there is more to making $100 per day consistently when trading options. You're going to need to find stocks that have a pattern of running up cleanly over the SMA line, and preferably at least $1 or so that it is easier to hit that $100 threshold if you were to just buy one lot. And the key is focusing on taking a position upon confirmation and then holding into the price strength over the SMA line and closing at early warning signs of a reversal, such as a validation point or even a more aggressive exit point, such as a reversal over our short-term SMA line. But again, with options, the notion of cutting losses quickly is ever so important. Since losses are multiplied, it's going to be extremely important to trade like a spoiled brat. Take only the best setups, get in and get out. But anyways, folks, the key is finding opportunities, learning how to find opportunities, and then going and using a paper trading platform to practice trading and practice your skills with these opportunities. And then, of course, doing this consistently until you have the skills in place to consistently make money within the stock market. And honestly, there's a ton of other ways to make money using options. So if you thought that this was valuable, let me know and I'll make sure to make some more options videos in the future. And honestly, if you do need more help finding opportunities, there's no reason for you to go at it alone. We do have the ZipTrader Circle Facebook group and Discord chat. You can check out the ZipTrader Circle Facebook group by clicking the link below and joining the Facebook group. We also have a trading tutorials playlist, which you can access, link below as well. Anyways, have a great day, folks, and I'll see you in the next video.